Because I hear from our.
Absolutely. I'm finding a lot of sugar coating over here among economists in Canada.
You have no audio on your presentation, correct?
No, I don't.
No video or anything? Okay. There, should be good now.
Okay, I'll be covering these six things. And obviously, we have to start, whenever we talk about Canada, we have to talk about real estate. Because Canada is real estate is Canada. No other country in the world has so much GDP and so many jobs coming out of real estate related sectors than Canada. So let's jump into Canadian real estate outlook. This is the per capita GDP of Canada. People look at Canada's GDP. Canada is one of the few countries in the world where per capita GDP is same for the last 15 years. People's income has not gone up. It is exactly the same what it was in 2006, 2007. This is Stats Canada, is all Bloomberg data. So you can see that, yes, we went up 2017, 18, but we are back to the same level. So the incomes have not gone up. Why have the house prices gone? See the difference between US income, house prices, Canada income, house prices. One of the most key. So the left one is US. Disposable income is in red. Home prices is in blue. On the right side, you can see exactly. One of the most balanced economies on housing prices in G7 is actually US. One of the most unbalanced economies in the world on housing prices to income is Australia and Canada. Actually, it's a funny thing. Australia is known as the luckiest economy in the world. Canada is known as the second luckiest economy in the world. We are comparing last recession to now. So Australia has gone 35 years without a recession. And Canada's last big recession was in 1991. 2008 there was no recession. 2020 there was no recession. Because the house prices never went down. People never felt the pinch. In US, people felt the pinch. Their system is much more balanced. So what has happened from 2019 is Bank of Canada is the one which is responsible for mess today. I'm not even getting into the government, what government is doing. It is the Bank of Canada because I look at only from economy point of view. Who manages the economy? 90% of all the bonds issued since 2019 was bought by Bank of Canada. And Bank of Canada they went on Twitter to say, no, we did not print the money. Then how did you buy all these bonds? You bought the bonds, you kept the interest rate low, which allowed people, which told people that interest rates will be low, they continued on buying bench, borrowing bench, getting mortgages, and now you want to get out of that mess? How will you get out of that mess? So 90% of all the bonds were bought out by Bank. This is second reason that real estate prices were high. I take no pleasure in saying that you can wash any kind of money in Canadian real estate. And I can tell you one thing, coming from India, you cannot wash money in real estate in India. And now, Chinese money is no more coming to Canada. Last month, I had a call with a Dubai-based builder. He was just smiling. All the Russian money, oligarchs' money, all the Chinese money, I don't understand the color of money. Money is money. Is coming to Dubai real estate. We did two things. Emergency Act declaration, we don't understand. I'm not getting into the political side of that. The economic side of that is, your money can be confiscated. We are no more a first world country. The first world country, the most important thing is property rights. That's the difference between India and Canada. Property rights. But that day you told me, no, you don't have the property rights. Secondly, Chinese are leaking capital. They don't want to leak the capital to Canada anymore. They've seen Emergency Act declaration. They've seen $600 billion of Russian central bank reserves being confiscated, held by Canadian government. So we are no more inviting the Chinese money, no more Russian oligarchs money. Russian oligarchs money was used to wash in UK and Switzerland. All of it is going into Singapore and Dubai. So we do not have, so our interest rates are rising. We do not have money from China to wash into our Vancouver real estate anymore. This is where Bank of Canada stopped buying the bonds when 10-year bond was 1%. Do you know today Bank of Canada is insolvent? They have so much bonds on their book. If you mark to market, although central bank can never be insolvent because the government will always bail them out, the Bank of Canada technically is an insolvent entity today. And what's the bond? When the 10-year bond was 1%, still 1%, that day they stopped buying the bond. Today, what is the 10-year? 330 times, 3.30. They kept the interest rates low actually. And that is why they allowed the borrowing range. You know your TFS, GIC rate was less than 1%. Today I'm getting a GIC rate of 5%. All these rates, which was, we call it financial repression, all happened only because of Bank of Canada. And where are the rates today? You know, there is a recent poll, 53% of Canadians cannot put 2 meals on their table. US Fed suggests pause after a 4.25 to 4.5%. We are around 3%. What that means for Canada? Is that the 4.25% Bank of Canada rate, 6.45% prime rate, 6.95% HELOC rate, 5.65 variable mortgage, all 1 to 5 year fixed rate with a 5 in front of the number. I actually know of people who took 1 year variable rate mortgage of 0.99% just 12 to 18 months back from HSBC. And if they have to reset it now, incomes have not gone up. Shit. What will happen? And foreign money is not there for me. I need a liquidity to tide over this crisis. Bank of Canada cannot give me liquidity. Foreigners cannot give liquidity. We don't have income. And we are not willing to exploit our resources. That's a separate discussion altogether. And we told tourists, you cannot come unless you do that right time, which is changing because the science is changing on 30th September in this country. So the major difference, so 1990 was the last time. In 1990 we had a recession. 1991. 50% housing related expenses as a share of disposable income was 50% in 1990. Today it is exactly the same. The difference between 1990 and today? In 1990, households in Canada had 50% of GDP. Debt as a percentage of GDP was 50%. Today it is 100%. We just have too much debt. We cannot have high interest rates. This is all going to break somewhere, unfortunately. And Bank of Canada yesterday was on Twitter. Our governor was there and saying why high interest rates are required over here. Yes, it is required, but it cannot function in an indebted economy, which does not have higher incomes. People have been HELOC debt at the highest year-over-year increase last year. What are people doing with HELOC debt? You can go on Reddit, Twitter, read people what they've done. They've taken like $50,000, $100,000 to pay for down payment of their home loans. Highest increase.
Could you just pull that line down so we read?
Where's the electric?
Oh, it is electric? Oh, man. Oh, here, hang on. I've never done this. Let's try it. These are lights, I think. Guys, I'm sorry.
Why did
you
we-
don't want to see it anyway?
Yeah, why did we invite Ritesh?
I have no idea. I have started with so many times, but I don't know.
Okay.
Somebody in your team will be good.
Yeah, it's another 10 to
Somebody in
15
your
minutes.
team will be good.
Yeah. And I'll be right back, guys. I'll figure this out.
So you have this real estate decline across markets now. Somewhere it is 30%, you know, in some of those areas of Vancouver and Toronto, all the prices have moved down. There are enough places you can find out what was the price in February, what is the price now. An average price decline is between 25 to 30% in house prices. So the bubble is popping. Our bubble has never popped for the last 30 years. We've seen correction, minor correction. We've never seen a 30% decline from top to bottom when we are so indebted that we cannot take more mortgages. And knowing banks, they will increase the risk premium for giving the mortgage. So this is a very, I don't know what Bank of Canada is thinking at this point of time, but we will have three choices, and if we come to that, I will tell you what are the three choices Canada will have. But let's just finish with this thing. That we have seen one of the largest record fall in prices since February. People balance sheets are not liquefied. Now comes, because you all manage business, you need to know what is happening in corporate profitability. How will the corporate profitability outlook? And I'm keeping it separate from real estate. Let's keep real estate separate. We are in a deglobalized world. The earlier we understand it, take it granted, you know, the better it would be for our business. If you see localization, regionalization is here, bring your supply chains home. Friend-shoring, near-shoring. Janet Yellen, US Treasury Secretary, just mentioned the word friend-shoring. You have supply chains moving away from China, moving to Mexico, moving to India, moving to Vietnam, but completely moving from China. 86% of all the CFOs surveyed by Bank of America in 2022 February said their supply chain will move away from China. Where will that go? US Treasury Secretary has very clearly said, friend shoring. We have to find those jurisdictions where the supply chains will move. But regionalization, I would say Mexico is a great example. You know, Mexican peso is up 20% against Canadian dollar in the last 2 years. Your all vacations are now up by 20%. Who would have thought Mexican peso, Mexican peso will be flat against US dollar in the last 1 year. And our currency has plummeted by 12% in the last 1 year versus US dollar. What is happening in Mexico? A lot of Taiwanese companies, Japanese companies, Korean companies are moving their supply chains to Mexico. I'm seeing capital moving to Mexico. So here in North America it is Mexico. In Asia it is moving to Vietnam, India. Apple iPhone 14, within 3 months of launch in China, will be made in India. What was India capable of till last year? Apple iPhone 5 refurbished. The supply chains are moving. Bring your supply chains home. You will no more be having access to cheap supply chains out of China. You will actually get incentives. There in US, states are giving incentives to bring the supply chains home. And the same thing will happen. And I talk about that. Why? But it's completely different. I have a Canada outlook and I have a Calgary outlook. Completely different. We have all seen our business grown in just-in-time inventory, just-in-time. That Japanese concept was so beautiful, just-in-time. Then we moved into just-in-case. After 2020 COVID, we said we do not have enough inventory. So we said just in case if we get demand, we went into increasing the inventories. Now what we are having? Just too much. Within 24 months, we moved from just in time to just in case to just too much. If Walmart cannot manage its inventory, think about what will happen to small organizations. The most important person in the organization is actually the purchasing manager. And this is a new normal. At some point of time, these inventories will be run down and we will be again running for inventory. We are no more in that world of just in time, which we have ingrained in our mind. What I've studied in my colleges, in my school days, just in time. No more. Because we are no more in globalized world. See what US interest rates rising, leading to what is happening now. Employees laid off. Q2 2020, when we had the highest amount of laid off. And now see the layoff. This is very good for IT companies. Because IT companies lost a lot of people to tech startups, to all kinds of startups. All these people will come back to IT companies. So IT companies were having, Indian IT companies were having a 30% attrition rate. 30%. We have 500,000 people, 30% attrition rate. All went to startups. So this slide is only for IT. If anybody is related to IT and they're having an attrition problem, don't worry. Within 6 months it is solved. Most of these startups will go very high. All these startups existed because interest rates were zero. Think of startup as a 30-year bond. You buy 30-year bond and interest rates are going down. You sell 30-year bond and interest rates are going down. All these startups, most of them, possibly you might have that 1 or 2% which will remain. Most of them will get very high. They will not get funding. Year to date, some of the biggest private equity guys who had made a lot of money in the last 2 years, their funds are down 50 to 60%. Cassie Wood is the biggest example in Santa. So why are we finding that we do not have enough people? Where have the people gone? US disability has gone up 15 to 60 years. This is Federal Reserve Bank's own data. Has gone up by 4 million people in the last 18 months. Where have the people gone? Why are 4 million people now more on disability? I'm not getting into conspiracy theories over here. I'm a data guy. So if 500,000 people, if 5 million people in the US are on disability, I'm just making an apple to apple comparison because we are 1/10 of Canada. 500,000 people in Canada are on disability. See the data, it has just started on 2012 when the COVID vaccination started. It could be mental problem, people don't want to get out, whatever it is. That's why you're shocking people. That's why you can't find people. And that is the biggest problem. That is the problem Federal Reserve Bank is trying to solve by raising the rates. Can't get people. They're just not there in the working population at all. And that's why the robot orders have gone up by big time. Next few years, we will all have to automate more and more of our business simply because we cannot get people. We cannot even get good quality. Good quality people are even rare. This is going to be the biggest headwind for corporate profitability. 1980 to 2020, US corporate profit as a percentage of GDP went from 44 to 51. Employees' wages as a percentage of GDP went from 51 to 44. Who was the biggest winner for the last 40 years? Shareholder and executive compensation. That era is over. The earlier you understand it, the better it is. This is what green line is, where people are supporting unionization in US. This is the most capitalistic country in the world. 80% people say we want unionization. This is a cumulative union election filing at Starbucks. On the right is the most interesting chart. If you cannot read it properly, then August 5, 1981, Reagan fired striking air traffic controllers. If people remember, that was the time that employees lost all their bargaining power. That was the top of bargaining power of employees. And if employees lost their bargaining power, interest rates kept on coming down. The money went into buyback, the money went into shareholders' profitability, companies' profitability. 2022, just last week, Biden pays striking rail workers. 40 years, the entire thing is reversing. Next few years, the biggest problem of corporate profitability will be you have to pay more to employees. Unionization is coming back. Treat them fairly. The time is over. Where we could treat them like shit. All big companies where you have people, they will say where the variable cost is high as a percentage of total cost, means employee cost, they will have a serious headwind of corporate profitability. And this is the biggest reason why corporate profitability will continue going down. 45% of all the incremental energy in the world from 2000 till 2020 came from only two sources. China kept coal and US shale gas. If both these miracles would not been there, we would not have seen this GDP growth rate for last 20 years. Both of them are over. US shale gas production, when President Trump left the office, was 13 million barrels. Today it is 10.5 million barrels. And China cannot find enough coal anymore. So if China cannot find enough coal, which is the cheapest form of energy prices will continue to go up. I would prefer to invest my money in the country where first and foremost we have energy security. I can't think of any country better than Canada. But we don't want. This is going to be a very big problem. See, this is the number of rates. I have not put the US oil production, but it is down to 1.5 million barrels in the last 18 months. Sorry, 24 months from the time President Joe Biden was inaugurated. So you had 4 reasons which I have given you on corporate profitability, which you'll have to manage. Business comes later. These are input prices. If you can manage these things, those companies will do very well. But we've not seen these things for last 20 years. Some of them for 40 years. We do not have enough time to change our track. We have to do it very fast. Big companies will find it difficult. Smaller companies can do it. So this is about Canadian soft landing is not likely. These are my words. Soft landing is not likely, but yesterday Oxford Economics wrote exactly the same word. Since 1800, there are 52 episodes of gross government debt reaching 130% of GDP, and 51 out of 52 countries have defaulted on their debt through restructuring, devaluation, high inflation, or outright default. The only country in the history of 220 years that has not defaulted is Japan. All the debt in Japan is held by Japanese. It does not have a current account deficit. That country is completely different. Canada will reach 130% of debt to GDP next year. We are at 115% here. US is at 130% already, last year. When was the last time US touched 130% of debt to GDP? 1944, when US was coming out of World War II. It took them 9 years for their debt to GDP to come down to 60 and 70%. How did they do it? They kept their interest rates low, financial repression, allowed their inflation to remain high. Today, US is exactly in the same position. But somehow, they are saying, we want to control the inflation. It will not end well. And Canada will reach 130% next year as government debt has gone through the roof over the last few years. Whatever free handouts which people have got, it has just taken from our future generations. Market will have to pick up. This is the most inverted yield curve. This is just a little bit technical term. I'm a fixed income guy. This is a very important chart for me. There are 8 instances of, I'm talking about US, this is a Canada chart. Okay, Canada does not have the history of the chart, but you can extrapolate it. There are 8 episodes in the history where 10-year bond yields are below 2-year bond yields. All 8 in US ended with a recession. Some mild, some serious recession. In Canada, this is 2 minus 10. minus 70 basis points. Last time we saw it was in 1990. The deeper this chart is telling me Bank of Canada is making a serious mistake. And Bank of Canada also knows, but they don't have a choice. It's about their reputation. If this continues to fall, we are headed for a serious recession. People are, for 2-year bond yield is 3.80, 10-year bond yield is 3.15 or 3.20. It's a 60 basis point of inversion, never seen in the last 40 years. Sorry, 30 years. 1991 was the last one we saw in Canada. The bond market is saying that Bank of Canada is driving the economy to the ground. There is a very close correlation, I think it is 0.91 or 0.92 between crude oil and Canadian dollar till 2020. We've broken that correlation. Canadian dollar now no more follows crude oil, simply because we have capped our oil and gas production. In an earlier episode, whenever the oil prices used to go up, our capex used to go up, big time. Foreign money used to come in, no more. Canadian dollar is no more respecting crude oil. I don't have this is a month-old chart. I don't have the details, but it is exactly the same. So this is crude oil and this is Canadian dollar. Canadian dollar yesterday fell by 2 percentage point, 1.5 percentage point versus USD.
Will any of that change, and this isn't oil, but it's not gas, when LNG gets going, because they're gonna have to drill. But when LNG terminal gets going and they've got to start filling the line to fill that terminal and export,
Yeah.
you're gonna have to drill for gas. So CapEx is gonna have to go up.
So
So will there be any, do you think there'll be a correlation change?
absolutely, the day capex goes up, we get foreign money to fund our capex. What this country needs is capex. We have enough resources, better than anywhere else in the world. We've just decided, under the guise of environmental, Greenpeace, and NGOs, not to do it. We are making life difficult for everybody. Uranium is a commodity of tomorrow, but we cannot. So this is our, but you're right, if capex goes up, our correlation will start. But we've capped our oil and gas production. We've given them a commitment by 2030 that it will be like this. So something has to change. But that's a political choice. So where will Canada get its GDP next year? Because 5 years, 10 years first, I cannot take this time. Just too volatile over it. What you're seeing over here is the yellow. So 2023. All the positive GDP is coming only from exports. Housing is negative, consumption is negative. People don't have enough money, no? After paying to banks for their mortgages. So the consumption will come down, housing activity will come down. We have a problem. I bet most of you did not know this data. That since 2020 February till June 2022, 92% of all the jobs which were created in Canada were in public sector. Small businesses have lost net jobs in the last 2 years. Unfortunately, I have to term this as Venezuela. Public sector employees were 19% of workforce pre-COVID. Public sector employees as a percentage of total employed people in Canada today is 24%. You don't want me to tell you that we cannot expect productivity from public sector employees. But our future generations will have to pay for all the pension liabilities and all the retirement benefits. Small and medium businesses, net loser of job in the last 20 months. So who's creating employment? You know that. So just for now, let me give you a comparison over here, because ultimately it's all about comparative analysis. In US, less than 10% of all the employees are in government services. In India, it is 6%. So that was on soft landing. This is now an impact on Canadian.
Well, that was the good news.
That's why I said this should have been the last presentation of the day, and from here it's directly gone for the train. It would have been better. Okay, thanks. I'm sure it has made your day worse.
Next time you're coming in at 3.
I hope that I have better, news next time.
Question is, that number that you cited in terms of the public sector compared to other countries, the one that wasn't on the chart, but US, does that include Crown Corps?
I cannot tell you that. Because that's coming from Stats Canada, the hub.ca has all the chart is from hub.ca, but it is a Stats Canada, so they have not given me that. Right. It is possible, you are absolutely right, but I cannot. Sorry, I think.
You need to go back?
Yeah, I'm just going. Just give me a minute.
Jerry, thanks for the question. We make money. ROE, 9%.
This is OECD has come out just now. OECD predicts Canadians will experience the lowest growth in real wages out of 40 advanced economies, 2030 to 2050. 40 advanced economies. Think about it, you are getting 500,000 immigrants over here. What are you going to tell them? This is a very interesting post, and it was before we had the latest Conservative Party leadership race. Okay, this was before that data. I just hope that it changes. Okay, that data. 30% of 18 to 34-year-old new Canadians and 23% of university-educated new Canadians say they are likely to move to another country in the next 2 years, citing high cost of living in current years. Canada this year, second quarter, the birth-death ratio turned in favor of death. Zero growth. Based on the population over here, not excluding immigrants, zero population growth. We need those immigrants because we need somebody to pay for the aging society. Otherwise, this is what getting to a mess. So we need those 500,000 immigrants every year. We need to create a space for those people so that they can come, they can take the burden of the future generation or the Canadians, pay for the taxes and contribute to the society. But if this is what they're thinking, good luck. This is not good. This is Alberta's economic outlook. I had written a post a year back. If you want, you want to read my thoughts, then LinkedIn is the best way actually. I put my thoughts on LinkedIn. Almost every day something what is happening on the world which people need to know because our mainstream media is not doing a good job of telling people what is happening in the world. Just for information, CNBC viewership is at 8 years left. And nobody got to CNN. So this I had written a year back. I talked to a couple of, few IT companies in India. I talked to a couple of CEOs over here who were getting people from US to Toronto because in US H1B visas and all visas are becoming a problem. But Canada is a clear path. You get a work permit, you get a PR, and you get a citizenship. So I could see a year back 5,000 new jobs coming in tech coming to Calgary. Yesterday, Infosys announced 1,000 jobs. Infosys BSL, again one of the top 5 companies in India. Their CEO was here in India, was here just last month. He's making Calgary as its not Canada's headquarters. They are starting a program with MRU or University of Calgary to train future people, future students into the tech jobs. Within 3 years, unless the world goes to dog, you will have 5,000 techies working out of Canada. Think about the economic impact. We have seen net migration out of Alberta negative till last year. This is all going to change because our cost of living is one of the lowest. I have written all about it, and obviously you know about the mortgage one. How cheap? Calgary real estate, in my view, is the best real estate for this decade. If I have to invest anywhere in Canada, It has to be calculated. Simply because I know how many jobs are coming over. It's an ecosystem, it's a multiplier impact which happens to the economy. And one more reason. Resources. We still export 3.6 million barrels. At least for the near future. Alberta government is one of the only one in Canada having the positive budget balance. Resources. The problem, we are not doing CapEx. We are just buying back our stock or giving dividends. But that means prices of resources in future will remain significantly higher. I will not be surprised to see $150 an oil in the next 2-3 years. I've never seen a cycle where the price is high, but people don't do capex. They pay dividends. Even in India, I'm finding, because in every cycle, all these guys go berserk, they do capex. But this time they're not that. Huge capital discipline. That means, let's look at demand and supply. If supply continues to go down and demand remaining the same, or third world countries wants to have higher demand, where is the supply going to come? By next year, we'll be down by 2 million barrels on demand and supply. It's at 100 million barrels demand, 98 million barrels supply. Where are we going to get it? Canada is not allowing it. This is the first time in history that OPEC is actually pumping below the target. They had all the reasons. They used to cheat. But this time, no. There is a spare capacity. That is very good for Alberta's economy because it will liquefy our finances. On the other hand, at least coming to this city and having a tech hub will make this economy, a multiplier impact on the housing, consumption, everything. So both Calgary, Edmonton, I think I'm very, very bullish. Having time. This is from my favorite analyst. He's still working for CSFD, Credit Suisse. Just, you have to read this one. Inflation is structural in my view. This is no more than inflation where you can hit on head with interest rate hike and say, okay, go away, go away. It has not happened since 1970s. From the time I was born till now, this is the highest inflation in the developed world. None of us, people of my age, have seen this thing in financial market before. Nobody exists in today's world who have seen this in market, who've seen this kind of inflation in Western world. Brazil has, so let me give you positive and negative real rate. Positive real rate is when interest rate is higher than inflation. Negative real rate is when inflation is higher than interest rate. Developed world always used to have positive real rates. Developing world's problem was that it always used to have negative real rates. Give us the terms. The highest positive real rates are in Brazil, Mexico. The highest negative real rates, sterling, UK. You know yesterday what happened. Their currency fell out of bed 4% in a matter of 2 seconds. Canada. US is trying to solve the problem. Eurozone. Other tables are turned. Money always moves positive real rates. Where the value of money, where there is a value of money. So what are tables are turned against developers. You cannot give me stable macros, positive real rates. Why should the capital come to Canada? US is trying to solve that problem by raising the rate. So, we were here from 2012 to 2020, deflationary boom. Too much supply of resources, leading to lower resources prices, leading to lower inflation, leading to money moving into US tech, because US went from 5 million barrels to 13 million barrels. The capital moved to US, and in US, what did it buy? Tech. 2020, Central bankers panic. They put too much money into the system which was not required. We had an inflationary boom till December of 2021. Unfortunately, the way we are going today, we are in an inflationary bust. Something is going to break. I do not know what it is. I have not seen this thing before. But Federal Reserve Bank is very clearly saying, we don't care about you anymore. Historically, US Fed has always listened to foreign central bankers. Historically. Because they never had big problems of their inflation was never more than 3-4%. This time it is their credibility problem. They are not willing to listen to anybody. Even Japanese finance minister pleaded with US Fed, what can we do? They are raising the rates. Let's just we will do what is right for us. We don't care about anybody. This puts us in a pickle. How do we manage our economy? Because we have deeply negative real rates. If we raise the rates, our housing market will go bust. If we don't raise the rate, our currency will fall out of the bed. There is third choice also. But nobody wants to listen to that choice. So we are in a stagflation world, and Bridgewater has done, the biggest hedge fund in the world, has done a study of last 40 years. Where to invest? This is not an investment advice, first of all. But there were 18% of the time in last 40 years where we were in a stagflation period. 18% of the time. You can look at the green one, which has done very well during those stagflation periods. US Fed is trying not to continue with the stagflation. I believe they will not succeed. Yesterday, so you know that gold is down from what $2,000 to $1,650, right? In sterling terms, yesterday gold touched all-time high. Gold touched all-time high.
Yesterday.
In sterling terms, GBP. So whichever country is having a stagflation problem, which US is trying to avoid, will see commodity prices going up in their currency, gold prices going up, even real estate prices going up in their currency. Because people want to get out of the currency because currency is losing value very, very fast. Bank of Canada is saying, no, we will maintain the value of currency, they cannot do it. This is from my favorite analyst. And on my website, Pine Tree Macro, there is only one guy whose quote is there, that is Russell Miller. Now he doesn't come into media anymore because he comes once in a while. Because he manages his own personal money. Just read his, you can read the entire thing, but the highlighted one is the most important one. It might be a long time back, but there were 15 years where the index gave you 0% return. Stock market gave you 0% return. Keep saying, we are headed for that period, lost decade. And he's the one who never sugarcoats. He tells the way his book is. This is the current cycle of tightening of interest rates, the way you are seeing the interest rates rise. This is historical. Bank of Canada is exactly like the same. This is the fastest tightening cycle in the history. It has never happened before in the history of Fed in the last 100 years. They want to redeem their reputation very, very fast. That means there are so many people who are leveraged. They will come. They say we don't care about it. These are the people who allowed us to make money. These are the people who are saying change will be necessary. I like this. I normally don't like Jim Cramer, but he was right this time. How do you get people to get back to work? To tackle their savings. And they have no choice. there are no savings, they will have to come for work. Even the people who are disabled will have to come to work. That's what Fed is achieving. Fed is saying we are at 3.6% unemployment, we don't care about it. We will continue raising the rates. If you are retail, it is your problem. If you are invested in financial assets, that is your problem. Bank of Canada is also saying exactly the same thing. Just last two slides. Till the time Bank of Canada changes its view, and I had shared this 3 months back also. Exactly the same closing slide. Put your business in maintenance mode, understand your supply chain better, keep extra cash in business. Get ready for large increase in bankruptcy, which I'm pretty sure will be good for some of your businesses. Small businesses will face dramatic increase in sales. Why? Because winter is coming. Now I must conclude with 3 choices which Bank of Canada faces today. Actually, 2 are in the hand of Bank of Canada, 1 is in the hand of federal government. Bank of Canada continue raising the rates. If they continue raising the rate by another 100 basis points, by end of 2023, we will have double-digit unemployment. Because more than half of the jobs in this country in private sector are in construction-related activities. But the Bank of Canada does not raise the rates because it chickens out. So it chickens out and US continues to raise the rates, currency falls dramatically and make Canada competitive because you become cheaper for foreigners. The third, easiest alternative, we allow capex in oil and gas. We open our companies, industries to foreign competition. Foreign money will come, take time into the country, liquefy our economy, everything will be okay. But that third choice is a political choice. First and second is Bank of Canada. How much pressure Bank of Canada will take once unemployment starts rising? I do not think the current Bank of Canada governor has the courage to continue tightening the policy. So we will stop somewhere in between. But this is a choice. There is no other choice. There's just no other choice.
Questions?
Are these windows, do they pop out if I?
I know why the guns are on the
I was
table.
gonna ask Jerry where he's got the boots.
I was gonna say, this can be something to go on. Yeah.
Do you see the home prices coming down like that in Alberta? Because I know we're a little bit in a vacuum here.
So you have not seen them going up? Like you had a last decade of home prices in Calgary, right? 2021 is when it started moving up. It moved up by almost 18-20% across. Now, if you're asking me about 6 to 9 months, yes, prices will move down. Higher interest rate means a lot of people will not be able to, right? And when the supply remaining the same, if demand just retraces a little bit, there are some people who will have to sell their homes. So any 6 to 9 months, 12 months horizon, you will see the prices coming down till the time Bank of Canada continue raising the rates. But a time will come where they will stop raising the rates because they have done enough damage to the economy or the inflation has come down. But think about 5,000 tech jobs coming in next 3 years. I only think from where the money will come in. So if you're asking me a 6 to 12 months, you have to stay on sidelines, but go for those auctions, which happened last week also. House auctions. Give bids. But beyond 12 months, if you're asking for this decade, if I have to buy my second house, it will be in Calgary. But Emergency Act was the only reason that I've decided not to invest in this country anymore. They can take away my savings any day they want. There's no difference between India and Canada in that perspective. Or the government changes.
That's what I was gonna ask you. So you mentioned there's political choices and economic choices, right? And you focus on the economic side, but are your not conclusions but projections based on consistent current government, or do you think if there's a change, say early next year, that there's an opportunity for for the timelines to change and for a shift in policy?
Yes.
Yes.
That means if you tell me that at federal level the government will change, Canada's outlook brightens it becomes completely different. Completely different, I can assure you on that. That day, nobody will be rejoicing more than me. Because I want better future for my daughter. It cannot be under the current policies. I have no views on the political side, first of all. I only look at what choices they are making. This choice is not good for the growth of the country because we need foreign capital to come and liquefy our economy. They've liquefied our housing till now. We want them to liquefy our businesses. But that will not happen till the time we change.
Something changes.
Something changes.
Yes.
Policy changes. Even if policy changes, I don't care about that. But policy changes. Because Canada has everything in the world you can think of. It's next door neighbor to US. What more you can ask? That's a $26 trillion economy next to us. We can't even maintain a good relation with them.
Mm-hmm.
Why do we need to import 1 million barrels from Saudi Arabia? Why can't we get it from our Alberta? No? We closed all our coal mining. I understand coal mining. I'm on the environmental side. But today the biggest increase is happening in coal mining across Europe. Why can't it happen in our country? For some time to liquefy our economy. I had a chart that Canadian E&P companies are the most green and clean companies in the world. They've done so much work. Nobody markets those things. We only market bad oil sands or something like that. I don't know about it. I'm not a conservative or liberal or this thing. I don't care about it. I care about the choices which we are making. India does not have choices because we don't have resources. We don't have choices.
It's interesting you say that coal mining is so big in Europe right now, because about 20 years ago, it was really dying out, and yes, the
They're
economy.
opening all their coal mines in Germany. The guy was here begging for LNG from us. We left him. That day was really, I was listening to everything.
Mm-hmm.
Because I'm looking at future inflows of capital into this country. This country needs capital. And there is enough capital available in the world to come to Canada. If we want it.
We have it all.
We absolutely have it all. So that's a very long discussion actually. Unfortunately, my expertise is only on economic side.
So how do you balance the different perspective on Alberta? You're pretty bullish on Alberta, as you said, and then pretty negative about the winter Canada-wide. How do you rectify that?
So you have to temper your bullishness on Alberta. Because if something happens at federal level, it will impact the provincial level. If federal level was good, then federal level would have liquefied even the provincial level. But if the federal level is bad, you cannot just stand out, so I have to temper my bullishness for the time being. Means whatever bullishness I'm having, and if federal level becomes positive, then the bullishness will go to the next level.
Even more bullish.
Absolutely, there is no doubt. I know the number of jobs over there are coming. I only look at number of jobs. I don't care about anything else. US H1B visa problem is the biggest boom which has happened to Canada. We need more people to come over here, young people who pay taxes to us. We are not having those kind of things. We are getting all those people who are coming at $45,000 to $50,000. We are not able to attract the right talent. But now with US, I was talking to some of the techies in US. They don't want to go back to India. High-end techies. They're happy to come to Canada, work for US companies. These are the people we want because US is losing them. Why can't we get them and create an ecosystem for them?
What are your thoughts on the global demand and interest in energy transition versus more traditional energy? I was talking to a friend of mine who's a really senior person in energy private equity. He said he was down in New York and other places in the US, but mainly in New York. And he said every single major institutional investor immediately talked about energy transition and didn't want to talk about traditional sources of energy.
You're right about that thing. I used to work for BNP Paribas. First they stopped me investing in SIM sector, alcohol and cigarettes. then they stop me investing clients' money in fossil fuels. If the mandate comes from BlackRock, who's the biggest institutional investors in most of the largest companies, and say, you cannot invest. Then executives have, even if they want to invest in traditional energy, they cannot invest. So we want to have a transition, but we are not ready for the transition. That means for the time being, traditional energy prices, fossil fuel prices will rise so dramatically because they're not giving them enough capital to sustain their output. 10 years down the line, you're asking me? Absolutely. I am also for energy transition. But we cannot have an abrupt energy transition. But I get your point. There is the money is moving in that direction. So if you're investing for 10 years, you have to invest for energy transition. If you're investing for next 3 years, fossil fuel. There is no private equity money in fossil fuels now.
From what I'm hearing loud and clear, that we may be on the precipice of, consumerism being dead for a long period of time. Are there certain areas of consumer spending that tend to do well through these types of periods historically, and what would they be?
Staples do better than discretionary. So discretionary consumption. So I did not share a chart, I got it yesterday. Canada's card sales in the month of July was the lowest since July 1990. I got it day before yesterday only, I got it.
So supply or demand?
Exactly. So there are people who are bullish who say there is no supply. There are people who are bearish saying there is no demand. But I look at, the percentage of disposable income, how people have to pay for interest rates and all. I think the demand is certainly weakening across North America. I have the data for US. The problem with Canada is that you do not get enough data. That Canada does not give you that enough data for you to make a guess. So you have to extrapolate US into Canada. I'm extrapolating US into Canada where people are paying less for their houses as a percentage of disposable income. With Canada, if they're paying more, that means less money left to buy other things. First, they stop buying the discretionary thing. Staples you have to eat. So staples you have to, but discretionary will come down.
You're taking the used supply car out of Canada and sending it to the US and playing an exchange rate. It used to be the opposite. Remember when Canadians used to try and get the cheaper US car out of the US? Now it's used car supply is going into the States. So you have that supply demand driving the prices here. That may change.
Yeah, so the latest data has come. Manheim used car price index, which was a big problem for central bankers because used car prices were going up. They are going down for the last 5 months in a row. Used car prices. A lot of these dealerships will not be able to sell the houses, or will not be able to sell the vehicles because they did not remain dealerships. They started owning these cars. So you will find that suddenly the demand is vanished. So if you're looking to buy a car, wait for 3 years. You will certainly get cheaper. Today, 30-year mortgage rate in US touched 7%. 7%. I think highest in the last 40 years. But the housing demand comes down, car loan rate starts moving up, car demand comes down, all these things will start. But that is what central bank wants. They reduce the demand, that's a good thing. But they should not break something, That's the problem actually.
Well, excellent. That's a good place to break. We're right on time. So thank you so much, Ritesh.